Stock market investors, what is going on? Welcome back to the channel. My name is Jason. We have some really good news in the markets today. My account's up huge, almost 3%. The jobs report came out as an absolute slobber knocker, man. Unbelievable how resilient the U.S. economy is being right now. It might slow down the way they're going to cut interest rates, but I think overall that's a good thing. I think the slower they decrease these interest rates, the better off the economy is going to be. So if you take a look at the screen right now, this is my brokerage account. We're up almost $3,000 today in our six-figure account, nearly 3%, a great day. Now let's take a look at this article. U.S. job creation roared higher in September as payrolls surged by 254,000 jobs. Here are some of the key points. Non-farm payrolls surged by 254,000 in September, up from a revised 159,000 in August and better than the 150,000 Dow Jones consensus forecast. So we're up almost 80% more than what they originally thought at 150,000 jobs. So that's great. It's shown resilience in the economy, and it doesn't look like a recession is on the horizon, in my opinion. So they cut interest rates by half a point, right? And I look going forward, they're only going to cut by 0.25% moving forward at the meetings that come up in the future. Also, a great note on this. The unemployment rate fell to 4.1%, down 0.1 percentage point as the survey of household employment showed an even stronger picture with a gain of 430,000, right? So instead of unemployment eking our way up to 5%, we're down to 4.1%, and hopefully by the end of the year we could tick under 4%, and that is great for the economy. Usually recession fears start to happen once unemployment reaches over 5%. So this is a great time to pick solid investments for your portfolio moving forward. As I said before, look, our account up over $3,000 today, 2.77%, absolutely crushing it. And if we look year to date, we're 2-year change, we're up 32%. In the 6 months, we could see this portfolio is consistently going up and up and up and up. And that's what we want to see from our portfolios, guys. Average hourly earnings increased 0.4% on the month, and we're up 4% from a year ago. Both figures were ahead of respective estimates, right? So the U.S. economy is showing its resiliency time and time again, which is great. Take a look at the chart right here, guys. This is the monthly job creation in the U.S. from January 2022 to September 2024. We saw a huge surge back in January coming off the COVID stuff, right? And then we saw some spikes, but pretty much a consistent downturn in job creation in the U.S. And since around April of 2023, we've been, up and down from down to the lowest at like 165,000, between that and like 300,000. And then over the last, 6 to 8 months, from the peak back in March of 2024, we've seen jobs right around 100 to 150,000, and then boom, the big 250,000 burger right here, the highest it's been since March of 2024. It's been a solid 6 months. So that's great for the U.S. economy moving forward, right? There's been tons of revisions and weird stuff happening with the job market, but most importantly, if we can keep unemployment in that range of 3.8% to 4.2%, I think that's the sweet spot where we can continue to decrease interest rates, get them back in that 3 to 4% range. This way, we can get better mortgages, we can get better personal loans, we get better credit card rates, so money becomes a little bit cheaper. Here's the year-over-year percent change in average hourly earnings in the U.S., right? We've seen a steady decrease since January 2022, which is great. That's another reason why we've seen a decrease in inflation, right? because we want to see a stabilization of earnings, right? And we creep back up a little bit, right? So when we creep back up, that's going to halt the way Jerome Powell and the Fed decreases in interest rates, right? So it's probably not going to be as rapid. I think they're either going to stand pat or decrease by 0.25% moving forward, right? We've seen a big boost from 3.6% in July to September at around 4%. Not a huge dramatic jump, but enough for the Fed to be like, okay, maybe we decreased a little bit too fast, so we got to slow it down a little bit, guys. It says healthcare, a consistent leader in job growth, contributed 45,000 jobs, while government grew by 31,000. Other gains included social assistance, 27,000, and construction at 25,000, right? We've seen the unemployment rate consistently go down from 2021 to about mid-range of 2023. And we've seen a, uptick in unemployment for, the better parts of a year, right? So this is a good sign that we see an inflection point in unemployment, right? So if we were in a recession, this number would be more of a straight line up. As we can see, the unemployment rate was a straight line down. Then we kind of stayed flat in that 3% range, which is great. And then obviously, once interest rates start going up and up and up and up, we're going to see what's happening right now is that there's not so much of these people cutting jobs. Is that like when people are retiring or moving on to a new job, a lot of these companies aren't replacing those roles and filling them in-house with current employees, right? They're taking responsibilities and spreading them out through their current workforce. So there's kind of been a hiring stalemate as of late. But we saw an inflection point, right? 4.3% in July, down to 4.1%. That is great news for the U.S. economy, guys. And we can see that in the numbers that are reflecting that the U.S. economy is very stable right now. I don't see a recession ahead. That is just my opinion. But I think all the numbers are leading us with indication markers that a recession, maybe a mild recession, or we kind of get in that stagflation kind of situation, but I don't see a full-blown recession, but we're going to see a market correction in that 15 to 20% range like we saw back in 2022. All right, guys, if you like these kind of economy updates, let me know in the comments below. Don't forget to like and subscribe. I appreciate you guys tuning in to this type of content, and I'm going to keep you guys updated on the unemployment rate. And I also think something we have to keep our eyes on is the GDP, right? Is GDP continuing to increase? If we get an increase or we kind of stay in that range of GDP gains, along with a stable workforce and unemployment doesn't spike, a recession will not come, in my opinion. Thank you guys for tuning in. Like and subscribe. Peace.